Awesome. Well, I'd like to welcome everybody
All
to
right.
our Monday training call. I have my good friend and CPA Len Tone on the line with us to kind of give an overview, to answer some questions. I met Len when I moved to Southwest Florida, kind of by divine inspiration. God sent us there, and it was a kind of a tough time in our life. And I met Len. You were the CPA for the church we were going to, which was at that time was one of the fastest growing churches in the country. And we met. I think you had a business networking thing, and we became friends. You became my
Mm-hmm.
CPA. Saved my bacon in a major way because I was trying to recover from my, financial upheaval in my life. A decade ago, last time the world economy hit the what. So and since
Mm-hmm.
then I've connected a lot of people to you as clients, business partners and family and all that. And I wanted to, we have a very fast growing business here. I think some people are going to find there's going to be quite a few people making money with Healy who've never really made much money with network marketing before. And then you go, it's good to make money, but now you have new money problems, right? you have to be
Right.
like, okay, what do I do with it? How do I manage it properly? So I'm gonna there's one simple quote I love. I like to keep things simple. Start talking to me about tax law, I like freak out. I'm like, I just like my brain doesn't work around that. That's why I pay you, right? But someone said
Mm-hmm.
once, he said, rich people want high expenses and low income, and poor people want high income and low expenses. So what does that mean, Len? And how does it applicable to having a network marketing business and taxes?
Mm-hmm. A great question. I know that taxes are a very exciting topic for a lot of people. Uh, Sarcasm aside, there, usually you got to keep these kind of groups short and sweet because people fall asleep pretty quickly. So I'll try not to. I'll try and entertain as much as I speak here. But the big thing is that with a networking marketing business in particular, or any small business. But the idea is that you've got the opportunity to now deduct items that you were already spending money on. And now they become tax deductible. Whereas when you work for somebody else, there is no tax deductibility of those same items. What kind of things am I talking about? Your vehicle, for example, is one. Your cell phone, your home internet, maybe a home office, your computer, the actual cell phone itself, the hardware, the piece of equipment that you're using to talk on. All of those things are costs that you have, excuse me, day to day, month to month. And when you work for somebody else, you can't deduct those costs, especially with the new tax law. They've taken away some of those deductions. So in order to get those deductions, you want to have a small business. So the things that you're already writing, already paying for, now you can write them off with your business.
Nice. So, for example, if I wasn't making much money in my network marketing business, if
Mm-hmm.
I take advantage of some of this stuff, will it increase my net income, even if I'm kind of suck at this network marketing thing?
Well, hopefully that won't be the case. But yes, because you could have your expenses exceed your income, and have a taxable loss. And I like to joke with people and tell people that I'm the only person you want to talk to that losing money is a good thing.
Yeah.
And you have a taxable loss, which brings your other income down. Say you have a two-spouse family and one spouse has a job and the other one's doing the network marketing. The network marketing has a loss. You deduct that loss from the other spouse's income and you report a lower income and therefore report lower tax and hopefully get a refund. And if we can get it down low enough, then there's actually opportunities out there, one in particular that I'm thinking of called the Earned Income Tax Credit, where you can actually get more money back than what you've paid in.
Nice.
If your income down low enough.
Yeah. And so I'll give a very basic explanation for people, an example, right? So years ago, one
Okay.
year, My friend made $90,000 from a job. I also made about $90,000 gross income from my network marketing business. He paid $20,000 in taxes. I legally paid zero. You know, that's a huge
Right.
difference that people don't take advantage of, right? So, what are some of this real basics of the first steps people need to do in terms of, okay, is it a hobby? Is it a business? What are some of the very first baby steps I need to do to start treating it like a business so I can take advantage of some of these tax advantages?
Okay, good question. Well, and that is a key question, because the thing that the IRS will look for is this a hobby or is this a business? In order to, you want to show it as a business. If it's a hobby, you still have to claim the income, and you might be able to claim the deductions on another sheet if you meet certain circumstances, and it'll be very difficult to do so. So if it's a hobby, you might end up spending more in taxes. So how do you differentiate between a hobby and an actual business? Well, you've got to be in business. You have to have a goal of making a profit. You want to show that you've put together a budget. You want to have business cards. You want to have a business plan. You want to have agendas of meetings. You want to have contracts with certain businesses that you're doing business with. Everything that a business would require. If you start to get to the point where you're really earning some money, you may want to look at an LLC, or even better yet, having a small business corporation called an S corporation, S like Sam. And that's where you get your biggest tax savings, is setting up the S corp. We can also put in down the road, then I know this is going beyond the question, but we can look at retirement planning and all other sorts of things that you can do to keep that income down from a
So,
tax perspective.
just to be a little clear, to clarify what you said, it's not technically a legal requirement for me to have business cards. It's a requirement to show that I want to grow my business. Does that make sense?
Yes. You want to treat your business like a business. What would you expect if you were to go into somebody's workplace? You would expect that they would have a business card. You would expect that they would have letterhead, that they would have office hours, maybe a website. That would be a good one. An email with your business name on it.
Yeah.
Things along that line.
So I need to be able to show, hey, I have been putting out effort to actually increase the business, basically.
Right. Now, some people will say, if you show losses, then you could be, then you could be audited or something along that line. And so one thing I like to point out is that there's a big difference between, you'll hear, oh, that's an audit red flag. There's a big difference between a red flag and doing something wrong. For example, a red flag might be showing losses. The IRS wants to see profit in 3 out of 5 years. So if you're not showing a profit in 3 out of 5 years, then you could be raising a red flag. But let's look at the economy from 2007 to 2012. There's a 5-year period that I don't think there were a lot of businesses that made money. That was a very tough time. And it would be very highly likely that you didn't make money in that 5-year period. So because it raised a red flag doesn't mean you did anything wrong.
Got it. So let's dig a little bit deeper into the nuances of starting a corporation, like when to do that, why to do that.
Mm-hmm.
Is there a certain income level at which, if I start making this amount a year, it becomes more and more advantageous to incorporate? And how about if, say for example, if I make a pretty good living outside of my network marketing business, but my network marketing business isn't making much money, is then there an added incentive to incorporate then as well? Can you explain some of that?
Sure. Well, the first thing is that there's 2 sides of it, and one side is a legal side that I'll just touch on very, very briefly because I'm not a lawyer. And if there's anybody old enough in the listening in, that I'll say, and I don't play one on TV.
Yeah.
So, But the legal liability is the first thing. That's one good reason to set up either an LLC or a corporation, because you'll be shielded from liability. And the reason I bring that up first is the example that you gave, Steve, whereas you might be making a lot of money from some other venture, and you don't want that other venture or that other income or all your life savings put at risk because of your small business. So you want to separate the two. And that's a good reason to have an LLC. Now, LLC does nothing for your taxes. A lot of people think that it does, but it does absolutely nothing. It is a legal liability company, and a legal liability company will do just that. It'll limit the liability if you're in a lawsuit, but it won't do anything for you tax-wise. To get tax benefits, you want to be an S corporation, as I was mentioning before. A lot of our clients, what they'll do is they'll start as an LLC because it's a lot cheaper, it's a lot easier to operate. And then when you get to a point where you're making some money, then you can tell the IRS, okay, I want my LLC taxed as an S Corp. So you're getting the benefits of both worlds, the LLC legal liability and the S Corp tax savings. And by having that LLC in place, you can convert it and make it retroactive to the beginning of the year. Whereas if you wait to set up an S Corp, it's effective the day you set it up. So anyway, so that's a good reason. Then you asked too, what is a good financial time to do that? Well, we've done a lot of research on that. There is some cost to running an LLC, or I'm sorry, to running an S Corp. The cost generally, depending on what state you're in, depending on what requirements that state has, there's federal requirements are the same across the board, no matter what state you're in. State requirements could vary. So generally, we say it costs about $1,000 to $1,300 a year to be an S Corp. So the idea is, are my tax savings going to exceed $1,000 to $1,300 a year? Well, what we have found is that when your profit level, remember, profit isn't what you bring in, it's what you bring in and then you deduct all of your expenses from, and then you have a net bottom line. When that bottom line is at $20,000, roughly, $20,000, that's when the cost of being an S Corp is about the same as the cost of being an LLC. Once you're exceeding that $20,000 point, you're saving money by being an S Corp.
Got it. Awesome. So now for me, what I did is I had, like you talked about, there was an expense associated with doing that. So before I started with Heli, I wasn't making a ton of money, but I wanted a corporation. I did it myself, and it was a quite stressful pain in the butt that I ended up spending some money to do it and then walking away from it. So I actually ended up I made a new corporation and just said, look, I'm happy to pay you, just take care of it. Because I'm not a tax person and I don't want to have the stress of dealing with government bureaucracy in my spare time. so that's one thing to think about.
Right,
So if people
right.
want help doing that, you can do that for them. One other thing I'm thinking of is I've heard that one of the super basic things about hobby versus actual business is have you separated the money? Does that make sense? Is that accurate?
Yes.
So like for me, I always tell
right. You
people,
don't want to what they call commingle. Right.
Yeah.
You don't want to commingle the funds. So the best thing to do is set up a separate account. You'll want to, if you do have a LLC or an S Corp, then you have a separate tax ID number, and you can use that tax ID number and set up a separate bank account. I would recommend, even if you don't set up an LLC or an S Corp, you can still apply for and get a tax ID number for you as a business, and then have all of your income and your deductions go through that bank account, separate and distinct from your individual account. Once again, it goes back to those two same ideals of setting up a business. Number one, if you set up a business, but you run everything through your personal account, then the lawyers can, what they say, pierce that veil of a corporate entity and sue you directly. Also, if the IRS sees that you're doing it that way, they're going to say you didn't run your business like a business, so we're not going to treat it like a business, and then they will disregard your entity and treat you as an individual. So you basically give up the rights that you set up by setting up a separate entity.
Yeah, perfect. So like the simple way I do it is if you open up my wallet, I have a debit card for my personal account. I have a debit card for my business. And so when I go to
Mm-hmm.
pay for something, I go, business expense or personal, right? And so that also helps with
Mm-hmm.
counting. In the end, if I've done all the transactions through one account, it's easier to figure out what they are, right? And so initially, if you're starting to write off business expenses, you may be transferring money from your personal account into your business because the business isn't making much money, right? So it's like
Mm-hmm.
I used to
Right.
pay for my cell phone bill. Now I pay for it out of the business account, but I'm not really making any money. So I'm having to transfer money into the business account to pay for business expenses. Does that make sense to everybody?
Right.
So,
Mhm. Right.
um,
That would be the way to do it.
so what are some of the most underutilized things people miss when writing off
Mhm.
things on their taxes?
That's a good question. Usually what I do is I write right across a sheet of paper and I give them this sheet of paper when they're starting a business, excuse me here, which is I tell them to, first thing you should do when you start a business, go to the hardware store. Get out of the hardware store and get a 2x4 and carve into the 2x4 this sentence. Is what I'm doing right now have a business purpose? And beat that into your head till it sinks in. So does this have a business purpose? Okay, right now, who's on a cell phone? There's a business purpose. Who's had to pay? I don't, I've got the free version of Zoom. I don't know if there's a cost version too. Any kind of software that you're using, the phone that you're using, the computers that you're using, they all have a business purpose. So does this have a business purpose? That's the number one thing. Then to keep separate records for the business. Um, some of the most underutilized, and in some cases, it's that fear. It raises a red flag. You may hear a big one that raises a red flag is a home office. So I don't want to have a home office that'll raise a red flag. Well, again, there's a difference between a red flag and doing something wrong. As long as your home office has to meet 3 rules. One, it has to be used regularly for business. And the IRS defines regular as 500 hours a year. So that's 10 hours a week. Okay, so if you use it 10 hours a week. Number 2, it has to be used exclusively for business. So if you have that extra bed in the bedroom that grandma comes down for Christmas time or something, then it's not exclusive. But if it's exclusively used for business, then number 3, it has to be what they call your primary place of business. Okay, I'm talking to you from my office now in Fort Myers. And if I were to set up an office in my home, I would not be able to deduct that office because it's not my primary place of business. Where I am right now is my primary place of business. If you meet those 3 rules, then you can get a home office.
Awesome. I find that over the years I've also gotten like mileage wise is huge. Now, one thing I always look at a network marketing business is it's uniquely suited to this because everyone is a potential prospect, right? Like
Right.
always talking to everybody. Like my parents, every network marketing business I've ever signed up in, they have been my business partners. And so we're always talking
Mm-hmm.
business. And therefore, when I go
Mm-hmm.
visit them and hang out with them, I'm like, well, they're business partners and we're always talking about business. And so it makes the trip to their home, especially if you're driving, a beautiful tax deduction. Really, it's like,
Yeah.
it's
Right.
awesome.
Right.
So
Right. Couple of really good points there, and thank you for bringing those up. If you travel for business, the business travel the rule is 50% of your time must be spent on business issues. So basically, on 50% of a business day. So if a business day is considered 8 hours, then 4 hours of that day must be spent on business to be able to write it off. Um, and the example I like to give, and I think, Steve, you may have heard this example before, but I used to live in Indianapolis. And I had 4 small children. And there was a conference in a city in Orlando called, a city in Orlando, let's just say, in Florida. And the conference was from 7 a.m. to 11 a.m. every day. So I took the 4 kids, got in my Suburban, drove down from Indianapolis down to Orlando, and I would have my conference in the morning from 7 to 11. There's my 4 hours. Then I would have the rest of the day to go to Disney with the kids. Now, the IRS doesn't care how many people I put in the car. It's the mileage that I get to deduct. They don't care how many people are in the hotel. It's the hotel I get to deduct. Of course, I get to deduct the cost of the class, right? Can I deduct the Disney tickets? No, there's no business purpose there. Any of the kids' meals? No, there's nothing there either. My meals? Yeah, there's definitely a business purpose to my meals, so I get some meal deduction, and that's how you'd write off basically a business trip.
Awesome. Here's a question for you. If you're my business partner and we spend a day doing business, then I'm like, I want to entertain my business partner to build a relationship. If we go to some form of entertainment after business, can I write that off?
That's a good question. It used to be yes, but the Tax Reform Act of 2018, entertainment is no longer deductible, just meals.
Right.
So,
well, that's why I hire you, because I don't know that, right?
Yeah. And that really doesn't go, I mean, the thing that you're talking about is very reasonable, and, you know, I don't think that there was any fear of abuse. The reason that was changed is that these big corporations would rent out these suites at football stadiums and for $50,000, $100,000 a year, and then take an entertainment deduction for them. That's the loophole they were really trying to close. But unfortunately, the small business owners like you and me, when they said no more entertainment, got stuck in that.
Got it. So meals, but not like the opera. Not going to
no more entertainment. That's right.
Well,
here's another one too. The golf club. If you're a golf club member, the membership is not deductible. But if you take somebody out on the course and then they charge you fees for the day, or there's a restaurant there and you have a meal, or the tea time fees or whatever they call them. I'm not a golfer, but anyway, those would be deductible. I'm sorry, didn't mean to interrupt.
No. So another potential question for you. I have a corporate. I'm required to have yearly meeting, correct? Can I have that meeting with my business partner who's also an officer of the corporation? Can we do that wherever we want to?
You can. And if you want to write off that meeting, again, I would incorporate that, try and find a way when you say you visit your parents and you spend an hour, maybe 2 hours going over with your wife, the business plan for the next year, and having your annual meeting then. This way you can get yourself up to that 4-hour a day minimum that you need to.
Got it. So for example, a lot of the people on here were working together on being more effective daily. So it would be good to maybe document that, so you have a written record of, hey, here's what we did on this day, and be able to go back and reference that. Would probably be very helpful in case. In case. Awesome. Well,
I
Len,
tell people that in business school. Go ahead. Oh, I was going to say, I tell people in business school that there are 3 rules to real estate, right? Location, location, location. I tell them that there's 3 rules to the IRS: document, document, document.
Awesome. Perfect. If people want to get a hold of you, I put you in our group. I may tag you occasionally.
Sure.
What's your website? Is it cpataxadvisors.net?
Yes.
I'm going to type
and
that
the phone number is 855.
Let me put this in here. cpataxadvisors.net. And what's the phone number there?
855 740 1040. Cool. And if anybody gets the humor in that, you'll see how limited our CPA humor is. 1040 is the tax return.
Love it. So who has some questions for us? For Len, did this make sense? Are people more encouraged to, do something with it? I'm always shocked at how rarely people take advantage of something like this. I mean, I always figure for the average person making a decent income, you're losing out on a couple $100s a month by not having your own business. And a network marketing business is great because it's cheap to start and run with no overhead. Questions going once, going twice. Lynn has a question
I have
for
a
us.
question.
Hold on. Go ahead, who's ever's talking.
Hi, this is Stefania.
Hi, Stefania. How are you?
I'm doing great. First of all, thank you for taking the time and educate us on all this. I think it's very important. So I missed the first few minutes, so maybe you guys already spoke about this, but let's say that now we started this healing process and we started from scratch. So none of us had any business set up, but so you would just suggest to start off as a business or simply creating a separate account under the personal name is enough? You mentioned something about the $20,000. Below that, it's probably not worth dealing with that type of account. Would you repeat that for a second? They said we are starting from scratch. I'm here starting off my healing business. What would you recommend to do?
Sure. Well, the first question is, do you have any legal liability that you want to protect yourself from? So you might want to set up an LLC. Very simple to set up, depending on your state. The fees are fairly small, and that will give you the limited liability protection. If you don't even want to do that, you don't have to, but what I would recommend is that you at least keep a separate bank account.
Yeah.
And you can still get a tax ID number as an individual. That's not a problem. You'd be considered a sole proprietor. The sole proprietor and the LLC are the sole proprietor is the highest risk from a legal perspective. The sole proprietor and the LLC are the highest audit amounts, but you do have the legal protection. It doesn't do anything from a tax perspective. If you're looking for tax savings and to minimize your audit risk, then you would want to be at what we call the letter S Corp. So an S Corp would save you taxes as well as provide you with that legal protection. But the S Corp will generally, depending on what state you're in, between $1,000 and $1,300 a year in different costs to run your S Corp. So you want to be able to save at least $1,000 to $1,300 a year in taxes, and that's where the $20,000 comes in. If you're making at least $20,000, then you'll save money by being an S Corp. And a couple of reasons for that, if I could expand on that a little bit. If you think about it this way, if you can get your business to generate, let's say you can generate $250,000. Okay, I think that's a nice big round number. So that's $250,000 a year. Okay, if you show $250,000 gross, I mean before we take any deductions for business operating expenses, $250,000, you will be considered in the top 1 or 2% of Americans filing tax returns. That's going to put you in a very high audit risk, right? But if you form a corporation and you have $250,000 of income, compare that corporation with, let's say, Starbucks or Staples or someone like that. You're going to be so small that you've minimized your risk of any kind of audit. The other reason is that from a tax perspective, you're going to save about 15% on your taxes. I feel like a Geico commercial. 15% by being an S Corp.
Awesome. That makes sense. I will say this. I have a relative who you take care of their taxes. The spouse makes a very good income. The other spouse does do network marketing, not super successfully financially, but the spouse often tells me that they're almost embarrassed at the tax savings as a result of your help. So
I think I know who you're talking about.
Yes, I think you do. So it's a big deal, you know. So
Mhm.
other questions? Lynn had a question, and you can go ahead, Lynn.
Hey there. My question was, you mentioned that the mark for doing an S corp was at 20,000. Is that $20,000 a month, $20,000 a year?
A year.
Okay,
And net, you're talking about
Net profit. Yeah.
Net.
right.
Yeah.
Right.
Awesome.
Yeah. Okay, that's good. Very good to know.
Well, good.
Mhm.
Perfect.
Hopefully that'll be no problem at all, right?
No problem.
All right.
Interesting enough, though, I mean, after writing off expenses, maybe we ask this way, for the average network marketer, what do you think the gross income should probably be before they start it? Because the net is, they're not sure how much they're writing off or what the end will look like.
Right.
Can you give a gross estimate typically for the average network marketing business?
I'm going to say we can usually come up with a third of costs to deduct. So in other words, if you could generate $60,000 a year, you're going to net 40,000. The third would be 20 in deductions.
Got it.
So I would say if you can generate 40,000, maybe 45,000 in gross income a year, which would be just under $4,000 a month.
Yeah, so $3,500 a month. You hit that, start hitting consistently. You might want to plan ahead. Now, I will say this: it's very important. I've had friends of mine who I got involved in a network marketing company. They ended up making a very good income, but they weren't planning ahead, like we're having this conversation right here. And because they weren't planning ahead, they ended up with a much larger tax bill than they really needed to, because it surprised them. Does that make sense? They're like, oh, they're making great money. We'll worry about the taxes later. It's like, no, they were making, it's about that $4,000 or $5,000 a month income. It's like, okay, start being more proactive now.
Right.
Instead of trying to do it retroactively. And it's like, well, sorry, you can't do it retroactively. And here's your tax bill.
Right. And there are some things we can't go retroactive. Like if we were to start an S corp, say today, it would be effective today. We can't go back to January 1.
Yeah, exactly. So awesome. Any other questions from anybody? I hope this has been helpful for people. Robert Kiyosaki wrote a great book. He said it's talked about the 10 hidden benefits of network marketing, like a university for people who like helping other people. That's the kind of business we're in, right? And one of the benefits is definitely the tax advantages, right? It's like for a minimal investment, I get access to much of the tax advantages that billionaires have with their corporations without having to be a billionaire. It's like I'm always confused if people complain about how low a taxes they hear about some rich person is paying, and I'm like, well, you could do that too. You're just lazy. It's like
Right.
it's like instead of complaining about it, it's like the government knows that small businesses and businesses in general, that our economy depends on it. That's why they financially incentivize you to start a business.
Mm-hmm.
And that's what the tax advantages of a small business are for, to get people to do it because it's good for the economy.
Mm-hmm.
I do have a question, if it's okay.
Yeah. Go ahead, Stefan.
So you mentioned so the level of taxation that my husband and I are as our own person, it's very high. We're like 50% taxation. But if I separate then my personal business and create my own LLC, then I will be taxed as an LLC, not as Stefania, and then, as me. And therefore my percentage of taxation will be lower comparing to what I am taxed right now.
Not exactly.
Okay.
An LLC and an S corp are what they call pass-through entities. What that means is that profit, the LLC doesn't pay any tax, the S corp doesn't pay any tax. The income from those entities go to the owners, and the owners report the income on their individual returns and pay the tax on their individual return. So, yeah, so basically what the LLC or what the S Corp does, if you want to be really technical, it drops it 3 lines on the tax return. But those 3 lines going from up here to just down here brings it into a lot lower tax. Up here, you pay an extra 15%. If you can drop it down 3 lines, then you get a 15% tax savings.
So
okay,
would
so even
would her incorporating her Healy business help to offset then the overall tax bill she has, as you know,
Well,
maybe her husband has a great job or something and he's making a lot of money? Does that help then?
well, the way that, no, go ahead. I'm sorry, go ahead.
well, it's, I mean, I understand. My point is I want to keep everything separate from us as a family, and because we are completely different level. This is my little baby thing. And so but my question is, my question was, okay, because I'm making as an LLC, then will I still be taxed at the percentage level that we are taxed now, which is very high, versus be a little bit lower? And I think you answered the question, which is no, you'll still be taxed at the level that you're in, maybe a few lines below, correct? A few
Correct.
percentages below. Okay.
The difference comes in when you're a business owner, there's 2 taxes that you pay. There's income tax, and there's what's called self-employment tax. If you become a corporation, that self-employment tax becomes a payroll tax, okay? That's the tax that we can reduce by incorporating. So we can reduce the self-employment or the payroll tax, but not the income tax. The income tax we can reduce by finding more deductions.
Correct.
Awesome.
Thank you. Sorry to take your time.
No, that's, we want people to ask the questions, so that's important. Awesome. Any other questions? Someone asked, what is the Robert Kiyosaki book? Robert Kiyosaki has actually written several really good books for network marketing. If you look him up, Robert Kiyosaki, it's Kiyossaki. So for example, if I went up here and I'll just show everybody. So if we type in here, Robert Kiyosaki, American Businessman books. All right. So his books, Rich Dad, Poor Dad is an excellent book. Just understanding, having a good business mindset. The Cash Flow Quadrant is actually a phenomenal book. The reason the Cash Flow Quadrant is so good, because it helps you understand the mindset necessary to go from an employee to a self-employed person to a business owner to an investor. And you can operate, you can have that mindset in a network marketing business, those same 4 mindsets. And as you change your mindset, how your business grows changes dramatically. And it's very important. Maybe we'll go do a training about that in the future. Let me see here, network marketing. So I believe, let's see this book here. Okay, so here it is. The Business School for people who, I'm gonna go here. Just want to bring this up. The Business School for people who like helping other people. That's the name of the book, specifically of his for network marketing. And it talks about the hidden benefits of having a network marketing business that don't have anything to do with income, which is very important. So any other questions? Read Rich Dad, Poor Dad. Okay, going once, going twice. So CPAtaxadvisors.net is your website. And so someone says, I have a W-8 status. Everyone wants a W-9 in network marketing. I have W-8 been filled for my private medical association. I have no idea what's a W-8.
W-8 foreign, it has to do with foreign income.
Yeah, interesting.
something else that I'm not.
And Alicia, Lynn's last name is Titone, Titone. So, yeah, we don't understand your W-8 question, something private, foreign income, something, not sure. Anyways.
W-8-B-E-N, foreign income.
Anyways, I think that's it for today. I appreciate your time.
Okay, sure.
And maybe we'll, if everyone has more tax type questions, maybe we'll do this again sometime and go into a little bit more detail. I am recording this. I will post it to our group. Len, if you want a copy of this to put on your YouTube channel, just let me know. I'll send you,
Okay,
the raw footage of that as well, and we'll go
Mhm.
from there. So appreciate all of you.
right.
An awesome week. Bye-bye.
Thanks.